but then that's not the only diligence that you need. And so to your point, I think as a buyer and even as a seller, both sides, you need to look at how the other side is viewing it.
If they're ready, they've taken all those necessary steps, we'll probably have a much cleaner transaction. You're going to get better buyers. You're most likely also going to get a higher valuation because those buyers come in and go, whoa, this is exactly what I'm looking for. This is what I need.
Welcome to the Before You Buy or Sell a Business podcast, where we help buyers and sellers learn more about the acquisition process, discuss recent transactions, and stay up to date on the latest news in the market. Here's your host, Jared Johnson.
All right, welcome back to Before You Buy or Sell a Business podcast. Today we've got Rosco on, and he's with Polaxis. So how you doing, Rosco?
Doing great. How are you doing, Jared?
I'm doing great as well. Thank you. I guess we're both in the DFW area, and it's actually snowing today. So we'll see how crazy that gets and
Yes.
how much it snows and how us crazy Texans will deal with it. But
Yes. We don't get so much snow. So this is a unique day.
yeah, it's funny. I feel like about 5 years ago when I moved here from Arizona, everybody said, "Oh, don't worry, it never snows," and then it snowed at least once every year. So,
Yes.
yeah, I'm like, sure, okay, yeah.
Yeah.
So,
And when it does, it shuts down the complete city. Even if it's just half an inch or a quarter of an inch, everything shuts down. Yes.
yeah, exactly. So it's fun. So you kind of serve the ETA or M&A space. So I thought it'd be great to have you come on and we can kind of talk through your background, how you got into the space, and then pick out little nuggets here and there of some advice for people that are looking to buy or sell a business. So let's get started with your background and let us know kind of how you got to this point and what you're up to now.
I've been kind of in corporate America for about 20 years. Started out working in Big Four public accounting. Then I worked for a couple of Fortune 500 companies. And really, a lot of all that work was helping businesses say what tomorrow looked like. So a lot of that is what would happen if we need to increase our earnings estimates, what is going to happen with EPS, what's the stock price if we double the company, cut the company in half, those kinds of things. And obviously, mergers and acquisitions becomes part of that. So I wasn't intently involved in it, but around it, because that kind of determined the company value. Then I did a piece within actually M&A, helping a company that was looking to move into some new ancillary markets. And so spent about 2 years doing M&A and kind of ended my corporate career kind of as a divisional CFO, domestic, international. So after my corporate career, I actually started my own business. And that was when I kind of really kind of became a business owner myself, looked at business differently. All the work I'd been doing was in larger billion-dollar organizations, and now I was running my own small, medium-sized business, which is a completely different animal. And in that process, I realized I did not have the same resources that I was familiar with in corporate. And so that's really where Polaxis started. I said, hey, I've done all this work, mainly in the financial and accounting space for these companies. Now I can serve as a support for people buying and selling businesses and running businesses that are small to medium-sized businesses. And so that's what we do at Polaxis.
Cool. Yeah, it's a great background. One of the big things that I've noticed over the last maybe even like 3 or 4 years has been that a lot of individuals that are buying businesses these days came from, let's just call it like kind of the higher level M&A. And what I've really enjoyed seeing is that they're bringing a lot of that due diligence. They're bringing a lot of that, kind of normal real world understanding of how to look at a deal down to the smaller, medium-sized business transactions. And I've really enjoyed that as a lender because they're really doing a lot more due diligence.
Yes.
Ideally, if you're doing good due diligence, it's going to cut down on, problems moving forward, and you're not going to end up with a deal that you probably shouldn't have bought. So it's been kind of nice to see people apply a lot of that to kind of the smaller side. So if somebody came to you and said, hey, I'm looking to buy a business, I have one that I've identified that I'm kind of curious about or might end up being the right target, maybe kind of walk somebody through what are the maybe 2-3 things that you would do right away with them?
They've gone through an evaluation process to determine what they want, how their personal lifestyle is, what their attributes are. I would kind of, stress test that a little bit, kind of ask them, well, how did you find this business? What have you done in the past that makes you think you can be successful in that business? Where do you think you will have some potential drawbacks or some areas where you need to grow? As you mentioned, I've kind of worked at the Fortune 500, but small to medium-sized businesses are different. And I had to learn, hey, I can't use every single thing that I did in for this company that has 5,000 for the company that I have that has 10. And so I would do a little bit just to kind of, stress test that, hey, this kind of makes sense and is a good fit. Then the next thing I think is really key is, all right, well, tell me what you're going to do with the business. So once you buy it, what are you going to do? I'm a strong proponent that you must have synergies when you are looking at buying a business. You can't buy it for, if it's the value is $10, you can't buy it for $10 and do nothing to it because all you've done is just trade the money. So you have to do something better. And so, you can do that financially, but then also you can just create a roadmap of, hey, this is how I would operate this business. There should be some financial benefits for that, but then there's also just the operational benefits. And so if you don't have a financial model, that's what I would be a key proponent of, is creating a financial model. And I'm also a big proponent of taking that financial model and creating different scenarios and operatings. There's not one way to get there. Something's going to happen. What happens if COVID happens? What happens if the industry doubles? How do you then work through that to make sure that in multiple scenarios you can be successful? And then the last part would be kind of just better understanding the deal. How do you know the seller? Have you had those meetings? Mergers and acquisitions is a process. To your point, it's not just kind of sitting around a coffee table. It shouldn't necessarily be sitting around the coffee table and, the seller throws a number, the buyer says a number, and you shake hands, and then, you bought a $50 million business. It's a process. And so, you got to make sure you have the process. And I'd say the last thing is then who else is part of that team? In order to be successful, you have to have people that are supporting you and helping you. And so who are part of that team? So do you have an attorney? Do you have someone that is, helping you find the deal? Do you have someone that is helping to make sure you have funding? So do you have a good lender? What's your process there?
Great. Yeah. Some great information. I think we're done. We'll go. No, I'm just kidding. Yeah, felt like you covered a lot of it. So yeah, that was great. Maybe we can unpack a little bit of each one and
Sure.
just try to make sure, we're kind of on the same page. So you had mentioned basically from the front side, kind of understanding like essentially, are they the right person to first buy a business, right?
Yep.
And then are they actually looking at something that kind of fits with
Yes.
with what they're looking for? And I feel like that's something great to touch on. One thing that I've noticed over the years is that you have people, searching for a business. A lot of them will start out, really excited, and they've got this very tight box of what they're looking for.
Mhm.
And 6 months goes by, 9 months goes by, 12 months goes by, and they're so tired of looking at bad listings or going down the road with some due diligence and it falls through, that all of a sudden they just kind of almost look at it like, I'll take the next deal that comes along. I don't care. I'm willing to throw away all the red flags and let's just buy a business because I told myself I'd buy a business. Or they've got this clock that's ticking with their search fund where they've got to find a reason to buy. And so, I think it's great that you bring that up. I'm big on trying to tell people, hey, I've known you for a little while now. And if I remember correctly, you were trying to find something in a certain region that did a certain amount of EBITDA, that had good management in place. This is way outside of what you were trying to buy. Like, is this something like kind of explain to me why you want to buy this? So I'm assuming that's kind of what you're
Yes,
saying.
most definitely. I think there are people that love to get in the weeds and the details. And even in my corporate America, we had executives that would spend more time in the factory than they were spending in the executive boardroom. Small, medium-sized business that you can get your hands with would be great. When you have someone that never wants to go to, the factory, maybe buying a factory isn't the right thing to do. For myself, I'd never done sales. I was a, finance accountant person. I didn't know how to sell. That was a huge struggle when I bought a business, and now sales, I had to run sales. And so I was able to do it, but I was not good at it. And so to your point, some of this is personality. Some of it's also financial. So, if you want to make a certain amount of money, does this business even allow you to make that much money? To your point, I think you can definitely get deal fatigue. And this is where a team kind of helps, so that you have trusted advisors that can tell that exactly do what you say. Hey, you were looking this way. This does not seem to be in there. Are you sure this is the right investment? Because to your point, I mean, you're using your own money, you're using other people's money. There will be some bad decisions, but you don't want bad decisions that become catastrophic to you personally or to your business.
Yeah, definitely. So, all right. So the second part was kind of doing some of the due diligence. So maybe you could walk me through, maybe break it down a little bit further. So if you've got a deal that you're looking at, you had spoke about like how there's kind of steps to it, right? So
Sure.
From the very beginning, when you get a deal, let's just pretend that it's a brokered deal. There's a SIM. What would you do from there? And then if you want to take the next step, what would you do? And then ultimately, if you're going to move all the way forward and kind of you're under contract and you're going to move forward with the deal, maybe walk me through how you would do that from due diligence standpoint.
Yeah. So starting off from the SIM, and hopefully you already have one, but from the SIM, I would create financial projections, right? And so then this is what they're telling you. Does this work? Can I finance it? Is this going to be enough take home money that I would like as a business? Then also that's where you would hopefully identify synergies. And some SIMs kind of give you some options, but you should think of your own. And so, maybe EBITDA is $2 million. You can finance that. I'm going to do 50% debt, 50% equity. This is all part of that financial modeling that I think is required. And then you would say, okay, I think I can also another $500,000 out based on redoing this, or I can double sales because I have channels that this person can't get into. And so talking through again what you're going to do with it day one of the business to make sure that financially it makes sense, but then also, hey, this is kind of this is something I can do, right? So that would kind of be step one. I think if that all kind of checks out, then the next step is working on a LOI, which is letter of intent. Generally, I would say you probably need, again, let's start building that team. You need an attorney to help you with that, which would give the overall terms of the deal, structure, how much you're going to pay, how it's going to work. Is there going to be a seller financing? All of those pieces would kind of go into that LOI. You negotiate that with the seller to get to, a level. And then I think diligence, begins. And diligence, I think a lot of times they think it's financial, and obviously you need to do the financial piece. So you need to make sure that if they say that they have $20 million of revenue, is that true? If they say that they, have paid salaries of X number amount, is that true? So you're going in, you're looking at documents, you're making sure you're validating the numbers that they've given you. But then that's not the only diligence that you need. And especially the larger the deal, the more things you need to look into. And so legal diligence, commercial diligence, those are all the things that kind of go into, all right, I know a little bit, I learned more, and everything that I've gone through is validating what I know about the company. And really diligence should be, what are the risks that are coming up? And not all those risks are going to blow the deal. There should be some risks that you can say, okay, yes, there is a risk. They're not properly insured. They're underinsured from our perspective. Okay, well then they're spending $100,000 of insurance. We think it needs to be 150. You add that into your deal model, and then you go back through. All right, does this make sense? Is this still a deal that we can take? And so again, you kind of have to look at the pluses and the minuses. I think sometimes you get buyers that they're looking for a perfect deal, a perfect company. If the company was perfect, they wouldn't probably be selling to you or selling at all. So you kind of have to understand there's going to be some things that are maybe a little hairy, but that's also where the opportunity can lie. So, to me, it's an iterative process. Again, very structured diligence. I think you should have a diligence, questionnaire checklist with my clients. That's what we give to the buyer, and you just walk through that. I think the other thing, you want to have management meetings. You want to meet with the sellers, understand them, understand how they think, understand what they think about their own business. And as you go through the process, you'll want to also move into, see the business for yourself, et cetera. But I think it really starts with kind of always having this is what we think we would do day one, financially, operationally. And as you learn more, you're tweaking that model so that hopefully everything works out. You know exactly what you're doing. You're not buying the business and then saying, all right, how do I do this? Right. You have a model, you have a thought to get there.
Great. Yeah. So, and then are you a fan of doing a quality of earnings?
I am. I think it depends on obviously the value of the business. Very small transactions, it may not make sense, but coming from my background, quality of earnings were things that were very, very common. I randomly ran into someone, I think 2 weeks ago, that did a quality of earnings. And unfortunately, he thinks that the company he bought has fraud. And this was just like, I was at the gas station and just randomly ran into somebody. So I don't know have all the details there, but from a protection standpoint, again, due diligence is risk. And so a quality of earnings helps you to reduce the risk or identify the risk even. Some risk you can't reduce, but you can at least identify, and a quality of earnings definitely helps you do that.
Yeah, I agree. And I think by definition, a quality of earnings is you're trying to basically identify how, clean are the books,
Yes.
the numbers that are being presented to you, how accurate are they? But
Yes.
What I've kind of noticed, quality of earnings really were not a thing that we saw in our world until maybe within the last 2 years. And so again, it was people that were coming from the higher markets coming down and bringing something with them. And at first we were kind of like scratching our head like, well, why would you do that? And then the more we got into it, I'm like, oh my gosh, this is genius. Like, why wasn't everybody doing this? Why isn't this required? But what I've also seen is that some companies are basically recreating the financial statements in a way of saying, hey, this really should have been in cost of goods sold, and maybe this should have been down here. And they're sort of verifying the numbers. And then I'm seeing a whole nother group that is really digging into it, and they are getting bank statements. They're looking at invoices. They're really, really digging into the company and finding out, is there fraud? Is there something here that's not lining up? And I've seen where they've been drastically off on revenue. They've been off, both sides, up and down. And then I've also seen where they've actually identified a lot of information that maybe the seller didn't even realize were probably add backs. So maybe if I know you've gone through some quality of earnings and done some yourself, maybe you could kind of give us a little story of what you've seen and,
I think, and so, to start off, I think quality of earnings it's not so much like an audit or other things that accounting firms typically do. It kind of is a gray area. There's no one path. There's no one roadmap of exactly how a quality of earnings should be done. And so I think that's one thing that any potential buyer needs to kind of think through. Second thing is they're not cheap generally. And so you need to kind of, my thought is you don't day one or day two go into, you have the LOI signed. The next thing you do, you start quality of earnings. I would kind of suggest you kind of dig a little bit and make sure you understand what goes on so that when you get to the point of the quality of earnings, you can tell them, hey, I think there's risk here. What type of quality of earnings do I need? Do I need a quality of earnings that, and in fact, the gentleman that I ran into at the gas station, the issue was they didn't dig deep enough. They were very high level, but they didn't get the bank statements, and that became the problem. And so to your point, I think when you know a little bit more, you can direct them to say, hey, I need to prove cash. That's kind of the basis of quality of earnings is cash that came in. What was that number? Does it match up with the financials? Cash that came out. What was that number? Did it match up with the financials? But then there may be other things that you may be looking at as well, become pertinent from the financial side. So again, I kind of think that you need to have enough management meetings and to have enough to be able to say, in addition, because again, they're a vendor, they're helping you as the buyer say, hey, I don't understand this area, but I think I'd like you to dig in deeper there. And I think that's where they can be very successful and very helpful. They take some time. So you also need to know that, hey, my deal's going to take a little bit more time. But again, it gives you that independent view, not yourself, not people that love you, that tell you you're great, that tell you can do everything. Or to your point, you get a little deal fatigue, you get a little bit anxious, and I know it's overvalued, but I don't want to say it. These guys will tell you, hey, this isn't a $20 million business. This isn't a $30 million. This isn't a $5 million business. This is a $2 million business. And so working with them so that you know exactly what you're getting into. I think the second benefit, and this probably as a lender, is it's a whole lot easier for you to lend on a deal that has someone independent saying, yes, it is worth this, than this just all being your own money. So that's where the benefit can come in. But to your point, they can identify things. I've been in situations where the seller has a quality of earnings and the buyer has a quality of earnings, and you have two accounting firms that are, battling it out on what adjustments really should be made. Larger deals make sense, smaller deals probably don't, but I think it should inform you. And I would say that's the biggest thing, is you do the quality of earnings to inform yourself. And the more people that you have that you trust that can look at the deal and look at the business and give you potential issues, risks, and responses, I think just the better. When I was in corporate, one of the big things we would do is we'd have a risk, then you also identify the mitigating actions. And so that is key, because you can also get negative on a deal where everything is bad, but, well, no, this is easy. This is a $5,000 fix. This is a fix that doesn't even require any money. Let's move on. The deal is good.
Awesome. Yeah, that was a great answer. I think it was something that I've been wanting to cover, so I really appreciate you talking through that. I think it's a great segue to kind of go on the other side. So when you're working with a seller, somebody comes to you and they say, hey, I think I want to sell my company. What are maybe 2 or 3 things that you'll kind of walk through with them that will I guess ultimately decide if they do really want to sell? And then if they are ready to go and they're going to sell, what are some things that they can do either right away, if they need to take time to do it, or,
Sure.
Basically what can they do to prepare themselves to be ready to sell, and then of course
Sure.
get the most amount of money?
Yeah, most definitely. And so this is kind of where I think people that buy businesses maybe are a little bit better prepared. So I'm a big proponent of just, you have to prepare. And I think people buying a business, just the nature of buying a business, they have to prepare. Sometimes sellers, though, it just becomes the click, I'm done, or I don't want to do this anymore, or I want to retire. And so I want to sell my business, tomorrow or yesterday. But again, it's a process and it takes time. And the more preparation that you have, the better you're going to get. And so preparation helps you either get a better deal if you're buying, or helps you sell at a higher valuation if you are selling. And so the analogy I like to use is selling your house. And so I've moved around several times as an adult and as a child. And so, it kind of resonates with myself. But if I'm going to sell my house, I'm just not going to put a for sale sign in the front yard. I'm at least going to vacuum. I'm going to clean. I'm going to do some preventative or some maintenance that I probably haven't done, but I need to. That outlet that didn't work, I probably need to figure out why it doesn't work and fix it. But then I may make some other improvements. I may install that rain, shower head that's cool that everyone else has, that increases the value of my house. So I use that analogy for the business. And so it's the same kind of planning process that you should use of, all right, what's some maintenance that I haven't done, whether that be financial, whether it be operational, whether that be IT, that when someone is going to buy this business, they're going to expect me to not have this issue. Maybe I need to fix that. What are some investments I can make to make the business more valuable? You can't do that 2 days before you try to sell the business, because people understand that. But if you're 2 years, 3 years from that, now it kind of becomes part of that business. Your valuation is what you've done in the past, not what you can do in the future. And so that's what it's going to be about. And so you need to know the answers to the questions before people ask you the question. And so if someone wants to sell, again, my first question is, well, who's your team? We don't market businesses, so you need somebody that needs to do that. Do you have an attorney? What do you know about your company? What do you like? What don't you like? What do you think other people would like or not like about your company? And then again, you kind of then need to do an internal assessment to understand, all right, where are your financials? Do they look a certain way? I'm a big fan of kind of going the opposite and doing a acquisition model for a business selling. All right, everyone kind of has a number based on the guy at the street or my buddy at the country club, but truly, what is your business worth? What do the numbers say your business is worth? And getting an independent view of, okay, this is what someone else is going to think, not just myself. Again, just like a house. I can think my house is worth $1 million, but if every other house on my street is worth 500,000, guess what it's selling for? It's selling for 500. So that's what I would kind of do. Again, preparing and really getting your house in order so that you can sell at the top dollar whether that be operational, whether that be financial, whatever the case may be. Doing the same thing is with the sell side or buy side, but also who then is our most likely buyer. Is it a private equity firm? Is it a husband and wife team? Is it a individual? Is this a passion project? And then that's where your marketer, your broker is going to then, lend and market towards those people. So again, preparation, kind of having a good evaluative view of what other people would think of your business, and then starting the process to make sure that you can get the most out of your money.
Great answer again. And one question I would ask, I guess, right away. So we just talked about quality of earnings.
Sure.
Are you seeing sellers do quality of earnings? Because again, I know that's something that is fairly common in large M&A.
Yep.
I'm not seeing it yet in the smaller deals, and I would love to see that because I think like all the things that you just covered, right? Learning, what needs to be fixed, what needs to be cleaned up,
yep.
How accurate are the numbers, what is the true value of the company? I feel like it would solve so many of those problems. And a lot of times what I'm seeing wrong with like the brokers on the deals, or even like you just mentioned, somebody wants to sell it for $1 million, but it's worth 500. It almost answers all these questions for them. So I'm kind of curious, like, do you think people should do it? And like, why aren't they?
Yeah. Even when I was in corporate, so we would be doing deals. We may have, 10 people coming to buy a business, and across the table, it'd be the seller and their uncle. And you're going to lose. If we have 10 people and you have 2, you're going to lose. Yeah. And so I think these are all investments to either reduce risk and get the best deal possible, or these are all investments to sell at the highest price. And I think sometimes for sellers, it's hard to substantiate spending the money and I'm going to get that money back, right? But really, if you think about it, if you can save $100,000 and you have of EBITDA and you're going to sell at a 4 multiple, most things pay for themselves when you think about it, right? Once you take that 100,000 times by 4, hey, that pays for itself, right? But I think it's just getting people to understand that, hey, this is actually beneficial and writing this check is actually going to help them. And so that's what I've seen in the past. I think you need to do the work. And I think a broker can, if you don't do a quality of earnings, if you have brokers that are educated, brokers that have dealt with this before, they can kind of go in and do those independent assessments. I'm seeing a lot more of that where brokers are starting to do that, where they can go in and not necessarily do a quality of earnings, but say, hey, this isn't working. This valuation isn't, making any sense. I think another thing, just to kind of take a step back, if you don't mind, I think the first step with selling a business is, how much do I need? What do I need to take home? And I think that's another thing that people don't do. Again, costs money to do so. But if you need to sell your business for $10 million in order for you to fund your retirement, and your business is worth 4, selling your business isn't going to get you to retirement. And so not knowing that, I've seen many deals blow up on the buy side where that doesn't happen. And so even on the buy side, we're starting to go in and saying, have you at least figured out how much you're going to sell to retire? How much do you need? And have you done that work? And if you haven't, how really serious are you? Because that blows up deals. So I don't know if I answered your question, but
no, yeah, you did.
I think the work needs to be done. Do you need a full report? I know people that sell houses, that real estate agents. It's sometimes hard for you to think differently about what you've developed and what you've grown, even myself, on my things. And I think that just takes time to wrap your arms around. I think I have a gem, but other people may not.
Yeah, I really like that analogy. And I haven't really, I do try from time to time to equate it to buying a home or doing residential mortgage, because I feel like a good amount of people understand that. There's a lot more information about that. So I do like that analogy, and I'll probably steal it from now on.
No problem.
So really ultimately, the easiest way to look at it from a seller's point of view is really looking at it from a buyer's point of view.
Yes.
So if you're a seller and you say, what could I do to my house or my business to make it as easy as possible for the buyer to just move in, bring their clothes, their toothbrush, and be ready to go? And what could they do to make little kind of quick improvements, right? So then as a seller looking at it saying, like you mentioned, hey, do I need to paint or put in a rain shower to entice that buyer to come in and buy it? It's kind of the same thing. If you clean up your financials, maybe do a little bit of that due diligence yourself.
Yep.
Make sure that you are prepared to sell. Because again, the other whole thing we could talk about for 3 hours is the psychology of it, and the problems and the emotions going back and forth and everything. So if they're ready, they've taken all those necessary steps, we'll probably have a much cleaner transaction. You're going to get better buyers. You're most likely also going to get a higher valuation, because those buyers come in and go, whoa, this is exactly what I'm looking for. This is what I need. I can just move in and unpack my clothes, and I'm willing to pay a premium for that, compared to them coming in and saying, not only do you not have a rain shower, but you didn't permit the back part of it. There's questionable landscaping and all these other things, and so it definitely makes sense. And I'm glad you put it that way. So.
Yeah, no, and that's kind of something I kind of think of. How do I think about it, and how can I'm big on analogies, so I have a ton, and sometimes they work, sometimes they don't. But to your point, I think that's really, it resonates. And if you've ever looked at even buying a house, you don't even have to buy. You've walked into that house that you're like, why are they selling it for this? And so to your point, I think as a buyer and even as a seller, both sides, you need to look at how the other side is viewing it, because sometimes emotions play. And for a large group, especially the higher you go, there's really less emotions in it. It really is. It's a data, it's a process. And so if you're emotional, but the other side isn't, it's going to cause a lot more issues. And you're thinking that they don't like you, or they're being mean, or they're trying to cheat you. But no, there's no emotion to what they just said. They're just saying it from their point of view. And so, I think for sellers and anybody that's selling something that they have done a great thing with, you kind of need a little bit to separate yourself a little bit, so that it's not your baby. It's not them saying you're bad, but them just saying, hey, why didn't you think about that opportunity over there? Why aren't your sales higher than they should be, than your competitors? It's not saying you're doing a bad job. It's just saying, hey, help me to make this look good. I'm a big proponent of win-win situations are the best. The more you can do that, the better.
Yeah, makes perfect sense. Okay, so now kind of tying them together. I know your firm also does fractional CFO work. Kind of explain to a listener what that is first, and then we can kind of talk about how on a sell side you can maybe use some of that to help prepare them to sell, or maybe they decide, I need to run this business for a little bit longer to get it to that level that I need the 10 million to be able to retire. And then from a buy side, kind of explain what you could do when it comes to fractional CFO work as well.
Kind of one of the things that we do when we're talking to our clients or potential clients, or just kind of how we see businesses, there's the baseline of what you need to do, and that's compliance, right? You need to do tax returns. You need to have financials to send the bank on the loan that you have or the line of credit. That's all good, but that's just compliance. That's kind of the basics. What a CFO should do for an organization is really help you with the strategy, help you think long term, help you optimize your earnings. And that's where the fractional CFO can come in. So it's kind of not just doing the compliance, but really professionalizing and taking it to another level. And that's what all of your Fortune 500 and Fortune 1000, that's what those companies do. They spend a lot of time and effort with people saying, why is it costing us $2 to produce this product? Why couldn't it be 50 cents? What do we need to do to get there? And so that's kind of part of what those fractional CFO services that we do. From a sales side, we can kind of come in and we've, in the past, we've run some engagements where we can come in and look at your books and say, hey, this makes sense. This doesn't. These numbers don't make sense. We can work with your accounting team. We can do things independently to make sure that you have a good sense of what you're providing. I think the other piece of it is you need somebody at the table that can explain your numbers to potential buyers. And so in some instances, sellers aren't the best people to do that. Especially if you're communicating to a quality of earnings, some accountants, you probably need someone that understands and speaks their language. And so we can serve in that capacity where we can kind of, speak their language and we know what they're trying to do and get there. And then the other part is less sexy, but you also just need, there's data, there's stuff that you just need to prepare. And so multiple years financials, tax returns. You kind of need somebody to make sure all that's ready so that when the buyer asks, boom, you have that, and it doesn't take you 3 months to do that. And so that's kind of work that we've done on the sales side to kind of help clients. On the buy side, we've really kind of helped in from the idea and the ideation of, all right, we want to acquire. What do we want to do? How do we want to do it? So we've helped people identify potential targets, research targets, do that work, but then also we've managed that diligence process. All right, we need to go ahead and do financial diligence. We need to have a kickoff meeting. We need to talk to the buyer. We need to have management meetings. We need to look at environmental. We need to, so kind of serving as a PM, project managing the steps so that not all of this is, on the hands of the buyer. And so we've also on the buy side helped with integration. I think this is a thing that people have kind of undervalued, even in the corporate space. I bought this business. I have a business. How do I integrate? I have two different cultures. I got a West Coast business and an East Coast business. How do I put them all together? How do I now send information back and forth? You need to think about that before you close and not after you close. And now you realize you have two different cultures. You have two different ways of doing things. You have 6 different systems. And now all of a sudden they all need to tie and talk to each other.
Great. Yeah. At the end of the day, it comes back to what you said a couple of times. You need a team. You need someone to help you. They're always looking out for your best interest. But then on top of that, they're taking a lot of the stuff off your plate that maybe you're not good at, and that's okay. A lot of business owners are good at 1, 2, 3 parts of the business, and that's it, and that's totally fine. So bring in the experts that know what they're doing, and you'll be a lot more successful. So
there's not enough hours in the day for you to be excellent and great at everything, and that's kind of part of understanding your mindset. If you're one of those people, then you may need to back off. If you're one of those people that wants to come in the room, shake hands, kiss babies, and walk out, you definitely need really, really strong people that are helping you, because you're probably not going to do it. So this is just all part of the, to your point earlier, the psychology, all of that, forming a great team that can do great things.
Yeah, definitely makes sense. So great answers. There's a lot of information in there. I'm sure people are going to be rewinding and listening to this over and over again to try to get some more information. So we'll go ahead and kind of wrap things up real quick. So I always ask 2 questions at the end. So First one, do you have a mentor, or have you ever had a mentor?
I do have a mentor. I need more. I'm a big fan of a team. And if someone else has already figured out how to get over a problem, why do I need to spend a bunch of time trying to figure it out for myself? And so I have a mentor. I generally try to pay back, and I currently don't have a mentee, but I love mentoring people and doing the same thing. Hey, I made a massive mistake doing this. Please don't do that. But yes, I have several mentors. I actually had a call yesterday with mine. It is very valuable in my career and in my life.
Yeah, definitely agree with you on that. So last question, what motivates you?
Challenge. I like making things better, and I like challenging myself. When it gets easy and boring, it gets boring to me, and then I'm trying to search for the next challenge. And that's what I love about business and entrepreneurship is my business is either going up or it's going down. My clients' businesses are either going up or it's going down. And so every day there's something either in my business or in their business that I feel like I can help them, be more successful with.
Yeah, that makes it a little bit more fun. Some people run from challenge and some people enjoy it. So glad you're one that enjoys it. Okay, so this was a lot of free information. Where can people find you so that they can get with you and work with you, and hopefully get you to help be on their team and get things moving forward? Sure.
So our website is polaxis.co. You can also email us at info@polaxis.co, Polaxis.co. We'd love to talk to people, even if it doesn't work. We just want to sit down, understand what you're doing, and if there's anything we can help, certainly do so.
Awesome. Thank you so much. I really appreciate it. I'm sure we'll do a follow-up. We can always dive into what's kind of going on in the industry. And
awesome.
There'll be another one, I'm sure, coming up. So
awesome.
Thank you so much.
I just wanted to also say, Jared, thank you for what you're doing. I think providing this education is key to people. And to your point, it happens all at the Fortune 500 company level, but that really this is what people need, small to medium-sized businesses. It's their livelihood, right? It's their retirement. It's everything. And so you need people like yourself that are helping to provide that education. So kudos to you.
Awesome. Thank you. So it's been fun. So we'll see where it goes.
Thank you for listening. We hope you found this podcast informative and helpful. Please don't forget to subscribe on your favorite podcast player. For more information, or if you'd like to discuss a transaction, please go to www.jaredwjohnson.com.